And right now, folks, we're going to jump over and talk to our man, Teddy Kekstadt. Folks, you can check out Teddy's outstanding newsletter. The Tiger Forex Report comes out every week on Monday. New issues throughout the week when warranted. You gain access to a webinar in there as well. It's only $97, folks. It comes with a money-back guarantee. You check it out for 30 days. I know you'll get some value from it. And under the services tab, he's got a couple of great webinars out there as well, capitalizing on time with calendar stock option spreads and Japanese candlestick pattern stock and option strategies. Teddy Kekstadt, good morning.
Good morning, Tommy.
So we are at a Fed day yet again, Teddy. Why don't we, can we start off with yields? If we could on Fed day, of course, but the market thinking maybe we stay where we are. What do you think about where this market is on yields? We're sitting at about 4.3% right now on the 10-year as we look for some speculation on Fed day.
Well, I think that today it's going to be a non-event, so I really wouldn't expect very much. I think that you'll see yields probably pull back over the next few sessions in the next week, but nothing radical today at all. So, I mean, they're not going to do anything with the rate at all today. So I think it's going to be more about what Powell says, which really won't be that much either because it's Fed day. So I would say we'll have pretty much a non-event day today, a lot of sideways trading. I would be very cautious as far as when it comes to yields and currencies today as far as trading. I would wait until at least the Asian to European session tonight before you really try. If you're gonna start trading actively, I would wait until then. If you're in a position, I'd keep your stops tight, and I wouldn't even think about getting in unless you have a really valid signal, because I don't think you're going to get any follow through. I don't think your reward to risk ratio is going to be really strong today. So and then afterwards, like I said, I think yields will start to pull back a little bit, which you'll see a decline in the U.S. dollar as well.
What do you think about going out this year, Teddy? I was looking at even swaps, and I know that it varies, but the market's thinking maybe 3 cuts, maybe even 4. Let's just say it's even 3. After this meeting, they have 5 meetings. What do you think of the premise of the Fed? Now, Trump wants them to cut, and we got a good jobs number last Friday, though. I'm trying to wrap my brain around, all right, where is this market? I try not to go too far out in the future. Then it's just a crystal ball. Nobody knows. But what do you think after this meeting? The market has some cuts priced in. And what do you think about that in terms of where we may end up?
Well, the market definitely has at least 2 quarter points priced in already, or at least, I'm sorry, the expectations are that.
Sure.
The pricing in is not because of where yields are at. So just for considering where yields are at right now, and then pricing in another 2 quarter points, yields should be lower than they're at right now in the market. So the market is actually hammering the yields right now. There's a big gap spread between the actual discount rate and the actual market rate. And that's this market, that's what the market's doing. It's commanding that right now. So now I think that as far as, having more than 2 quarter points over the next year, I think that's being a really, really, at least with the current Fed, I think that's an impossibility, to be quite honest with you, because Powell was very transparent, and then the reason I'm saying that is why has he not already cut one more time already this year? He did back in October, and the conditions right now are actually more. If he did it then, why is he not doing it? By now he should be doing it. So
I agree. I wanted to ask the question because I agree totally. Yeah.
And so I think he's switched. Before like I said, he was one of the most transparent Fed chairman in my lifetime. It was very easy to see what he was going to do because he said what he was going to do. I was just saying it, calling it right out before. There was no surprise. Now he's not going with this narrative. He wants unemployment higher. It's not going up. And that's when he wants to cut rates. That would be the only thing I think that's going to do it. Until then, he's not, because as far as the inflation numbers and all the other data, he should be cutting rates. But then the Fed always does the opposite of what they're supposed to do. So it's not in their best interest right now, and he knows that
he's going to wait. Yeah,
he's just going to push it out, which is really a bad play, because we know that the last administration did so much financing with short-term rates that it's all coming due instead of using the 30-year, and we need to do it on the 30-year. So he's costing the U.S. taxpayers a lot of money right now.
Do you think that's going to weigh on the dollar? Because debt's in focus, of course, and I'm not talking about today on Fed Day, but right. Looking 3, 6, 12, and boy, you really go out. the dollar's in a great spot right now at 100, and I'm like, man, I'm trying to think longer term, and it is a tough win for that reason, for that debt number, man. Boy, it's a rocket ship. We know it is.
Well,
and at some
one
point,
thing you have to look at for as far as dollar strength now, if there is no rate cut on this meeting, here's what's going to happen. Next month is very likely that the Bank of Canada is going to cut rates. Okay, and it's also very likely that it could happen in some other central banks, which means they're going to be cutting rates in front of us. Okay, and if that's the case, we're going to see dollar strength come in by default, and that means also yields probably will also go up as well. So this is something to be very mindful of. If Powell doesn't do this, it's very likely that we'll start to see dollar strength coming into the summer. So that's just something we need to watch out over the next couple of weeks. We'll be talking about that after this meeting, and then we'll start to see how the trend goes. Because if the expectations are that he's not going to cut for at least another 2 or 3 meetings, well, that's going to then we're going to probably start to see a trend, when that means that yields are going to be going higher and not lower.
Okay, watch out. And the DXY in general, what do you think about you do a great job, and thanks for pointing out those currencies, man, but you breaking down the individuals, but watching this DXY, that nice 100 point, we rejected a little bit today. What do you think about the DXY at this at 99.43? We pulled back last couple days, but right at that 100 price point right now.
Well, today I think you're not going to see very much action. We've had a nice pullback the past few sessions. Right now it's been in a corrective rally over the past couple of weeks, if you will. Yeah. So it was interesting because the bottom that we've formed over the past month is kind of a head and shoulders bottom, and now we're kind of at that critical test. I think today will be sideways. Now, if the dollar index continues to go lower, well, then we might be making new lows. Okay. Yeah. But I think that there's probably a better chance that, like I said, if Powell doesn't cut rates, I think yields are going to go higher, meaning that we'll see the dollar index actually start to climb, which means we'll have that head and shoulders bottom. And if that is secure, if we take out the high from last week in the dollar index over the next couple of sessions and get a close above it especially, then I think you could probably see the dollar index get up to 101 to probably, it could even get up to the 102 area over the next, say, month.
Okay.
So, and that would be a nice, but then remember, it is still in an overall downtrend. This is a corrective rally. I just think we could have a nice extension on the current corrective rally.
Nice. Yeah, I just looking at it over years, it's remarkable how much that dollar has moved, of course. And then what do you think about gold? I tell you what, can you hang with us? We'll talk a little bit of gold and some crude when we come back, all right?
Sure.
Okay, stay tuned, folks. We'll come back with Teddy. We'll talk some gold. Gold down $19 right now, but you're trading at $34.03, and you got that crude contract still under $60, $58.94. NASDAQ negative by 1 point. S&P's positive by 10. We'll come right back. Welcome back, folks. We got the markets in positive territory. You got gold off $18 at $34.04. We're talking to our man Teddy Kekstadt. Don't forget to check out the Tiger Forex Report, folks, right under the newsletter tab at TFNN. Go check it out. And yeah, let's talk a little bit of gold and crude if we can. So you gave us your take on the dollar, which, if we get that type of, even if it's counter trend, but boy, remarkable acceleration the last couple days, up to 34.50 almost yet again. What do you think of gold at 34.04 right now?
Well, I think it's we're pretty near that high that we set, a week and a half ago. If we take out yesterday's high, I think that we're going to have a really good shot at challenging that previous high. I think that we can get up to, I would say, that 35.55 level if we start to, pierce through that, little ceiling there, if you will. I wouldn't get too overzealous on the, expectations of going much higher than that right now. Especially if Powell doesn't do anything, I would wait until let's see what he does today. And I think, like I said, he's not going to do anything. And then I think that's going to lead. I think gold's about to kind of basically start buffering on a high and start to set a range trade. Where I think that the low that we set a few last week, that's probably going to be near where you're going to see your bottom of the range for gold. And now we're going to probably test, I think, between basically 3,240 up to now a 35.55 price target. You might start to see that as a range. We start to bounce between that, until we have any really definitive clear view of what the Fed is going to do in the future. Because, like I said, if the other central banks do start to cut rates, like, and I do believe that Canada will as well. Now, the Bank of Japan is not going to do anything. It's very likely that China will. It's very likely that it'll happen also with the ECB. So we'll see if those countries start doing that, then we'll start to see this start to gyrate a little bit.
Teddy, I appreciate it so much, man. Great information. We appreciate it. We'll look forward to talking to you next week.
All right, take care, Tommy.
Take care.